Hello traders, Gary Wagner here just before 2 o'clock in Honolulu, 7 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is December the 4th, 2020, and this is the Daily Report for Gold and Silver, our weekend review, and what a week we have seen. This is a week that I will call recovery. We hit lows this week as well as last, down at around $1,750 and closed well above $1,800, currently above $1,840. That is significant. We will talk about the technical indicators during our chart studies, and we will talk about the fundamental reasons the market's moving in our opening letter. But first, let's take a look at current pricing. Traders, although gold closed only marginally higher on the day in both spot and futures markets, it had a respectable gain in terms of the week. We can see this weekly chart, which is on the lower left-hand side, and I'll go ahead and circle it right now. And we can see that we had roughly a gain of approximately $60. We also had pretty much equal lows from the week before, which tells us that there was significant support at the 50% retracement level. Of course, we'll cover that in detail when we pull up our technical studies. Gold, $18.42, up 90 cents. Spot gold closed at $18.3850, up 29 cents on the day, and it also had a significant week when you look at the weekly candlestick chart here. Silver gained almost 0.75% in trading, about 19 cents. That closed at $24.32. In terms of the ETFs we follow, we had a mixed bag with silver moving higher on the day, gaining about 5 cents per share, $22.48, and gold sustaining a small loss of about 50 cents per share, currently at $172.32. And that was all with a fractionally higher U.S. dollar. Lastly, Bitcoin closed this week at its highest level. It did trade lower on the day, down $650, and is currently fixed at $18,915 per coin. Traders, an extremely interesting week filled with action in the precious metals markets. We are looking at a daily candlestick chart of gold. It's the continuous contract, which now reflects the February contract month. We can certainly see that we had that pivot or V occur this week as we hit lows at the beginning of the week. And what I find most interesting is not so much that we got a reversal, it's where we got the reversal. Because if you notice, the lows that came in really came in very, very close, if not exactly at the 50% retracement. And I really believe this is a valid retracement data set because we're going from the lows in March to the highs in August. And so for that reason, that gave us our first indication that we could be witnessing the end of the correction, but more importantly, a key reversal, because you can find support and just watch the market trade sideways. That is certainly not what we saw. We'll go ahead and enlarge this chart so I can show you some of the more dynamic things that we witnessed. And one of the key elements that we talked about throughout the week was the fact that as this market came down, these three candles, this green candle here, this one in the middle, and this candle here is a variation off a three-river morning star. It's a variation because this small-bodied candle in the center does not gap below the red or the green candle. More importantly, we had a solid close above the 200-day moving average, and that occurred on the following day, this being Tuesday. Wednesday, we had respectable gains, and yesterday we had respectable gains. Now, although gold did close up about $1 higher, it closed slightly lower than the open. That's why it's red, but it is also telling us that we continue to see the level of, call it $1,850, being a level of resistance that it still has not been able to overcome on a closing basis. And the reason that number, I believe, is so important technically is it is the 38.2% Fibonacci retracement level. However, as we've stated, this market is driven by news. If we get an announcement over the weekend or Monday that they have basically drafted the bill and are ready to put it to vote, then I think we will see gold not only take out this particular price point, but it will challenge the 50-day moving average rather quick. We could see that happen in just a few days. But again, this is a news-driven event and a news-driven rally. And traders, lastly, I do want to take a look at silver futures. This is now basis the most active March contract. We did get in just a few cents below current pricing. Today's move certainly was a good move to the upside, 18 cents. But we have been talking about the fact that silver has truly been acting differently in terms of its tandem moves with gold. We noted that silver never challenged the 200-day moving average, whereas gold did break through it, is now back above it. And we also noted a key level, which is the 50-day moving average, which silver is now trading above and gold is not. That tells me that intrinsically it seems as though silver has much more upside momentum working with it than gold does currently. And so that's something we want to be aware of. Maintain your long silver futures position. This has truly been a transformational week with gold finding support and moving higher. As we go closer and closer into the holiday season, I want to once again ask that anyone that has profited this year from their investments perform one random act of kindness for those millions affected by the pandemic. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for the next daily update and review. Bye-bye.